What's going on, guys? Today I was able to catch the Thursday reversal profile. I was able to catch over 100 points on the Nasdaq, so let's get straight into it. So, before I scare you guys with all these drawings, this is what my chart was looking like, but we're going to keep that clear for just a second. So, waking up, this is what I was looking at. Price was like this. So, this is the 8 a.m. candle. We had high impact news at 8:30. And you guys can see that we have midnight down below here, right? And there's meaningful manipulation below midnight, right? We even have a stop run here of the 2 a.m. low. Then we have a nice expansion higher. But we're stuck in a range, and we know that there's not a lot of high impact news this week. And Wednesday is normally your first day of when you're going to get your expansion. And since Wednesday failed to do so, and Thursday has this sus move higher, all I was looking at was these smooth relative equal highs to get taken. And then my eyes go left, right? So this is taken, and then what's up here? This high from last week, Friday's high. And then we have our equilibrium in the range, right? From here to here. We are now in a actual premium of the range, right? We can make this a different color just to make this a little easier on everybody. So now we're at an actual premium of the entire weekly range, monthly range, however you want to say it. And now we have a premium PD array, right? So whenever you want to be using hourly or higher, 15-minute to anything higher, or anything higher than a 15-minute PD array, right? That's what you want to be using. So in this case, I didn't see anything like really meaningful in the 4 hour. You can see tiny little FEG, so I went in the 1 hour. What do we have? We had this 1 hour premium fair value gap, so that's important. It's in a premium, right? Now we have our high and low of it and this consummate encroachment of it marked out, and we also have this high from Friday as well. That was not taken on NQ, but guess what? It was taken on ES. So if we go to ES and zoom out, here's that same high. This high from here, midnight's Friday high, was taken, right? We go into replay mode, you can see that was taken. So now we have price lining up with our Thursday reversal profile. We have 8:30 lows still intact. We are now in the premium hourly fair value gap with hourly SMT. So all of that lining up is that's making me have this strong bearish bias, even though we have this entire move higher, right? So now zooming in, and going to the 5 minute, if we were going to go higher, if this was going to be a classic expansion day, which I initially thought it was going to be, we want to see the order blocks that were created before open hold. So this is your 5 minute order block, and then this is what you can see, right? And this is also, if you go to the 1 minute, look at how price is just stuck inside of this hourly fair value gap. I wanted at least a candle closure, a 1 minute candle closure above any of these, right? And some displacement through this area. We failed to do so. So this is where I actually took my first loss of the day. I should have anticipated the stop run since these highs were so clean, and I did want to see a Judas swing at 9:30. So this is what we got, right? Sometimes it will just leave. So I took my chances, right? We had SMT up here as well with ES. If we zoom in to the lower time frame, you can see ES is making a new high at 9:26, while NQ did not, so it failed to do so. Then we now have a change in the state of delivery with this candle closure below. The only thing is that we were still respecting this 5 minute order block at the time being, right? So I got in off the retest of this order block here, which I thought was the change in the state of delivery. I immediately got stopped out. And like I said, I was like, okay, maybe I'm just offsides. I got price stop hunted, and then what did I want to see? Like I said, if we are going to get a 1 minute candle closure above here, I wanted to see what fair value gaps left behind, displacement through this area. All I did was wait. This is not an order block. There's no fair value gap being created. Straight lower, closure below the last high up close candle inside of this premium array that we're inside of everything that we've already outlined with the 1 hour SMT still intact, and we are inside of this daily FEG as well. So if we zoom out, that's what this is. This is the quadrants of the daily fair value gap, so that's why that's on my chart, and that will come into play later. and that is also this 50% of this is what should be used as support. So I didn't get in right away. I just wanted to see if this would leave any kind of fair value gap for me to get back in. Once I saw this, I knew I was my bearish bias was correct because of the move lower with 830 low being right here. So now with 830 low being taken and then this continued displacement, now we have to zoom out and look for our other liquidity pools. Something to note as well is this week is not going to offer just a classic expansion. When we're stuck in between all these PD arrays, when the higher time frame looks as choppy as it has and there's no news, and we're in the holiday season, right? Thanksgiving's next week, all these different things are lining up. Do not get caught off sides, and don't be afraid to short when you have all these bullish PD arrays, right? All of this is just low resistance liquidity. So if we zoom out, what's our main objective? Price was above 830 and midnight, so we're now in a deep premium as well as being inside of that hourly premium fair value gap. Price is in the premium of the range, of the entire range that we've already looked at, and we have hourly SMT once again. And what do we have? We have a 5-minute candle closure below here, way below here, displacement. This should now be your breaker. I didn't even want to see this get returned to. This is the 50% of this red line is the 50% of the daily fair value gap constant encroachment. We close below. That's very, very bearish. And now, so our first drawn liquidity is midnight price. That's your first area of a discount, quote unquote. And then we now have our London low as our other pool of sell side liquidity. So now seeing this move, I wanted to see the standard deviation projections, just how far can the move actually go. So we actually never got even a retracement. I wanted to go short right here inside of the silver bullet zone. Never got that. Did not chase price, even though I just got stopped outright. Just kind of waited, and now see we're at midnight. So now I'm completely hands off. Now I want to see what price is going to do. And then this is why you don't chase, right? Understanding that midnight is a discount level. This is why you do not want to be shorting here, and you don't want to be shorting this inverted fair value gaps, right? So we wait. Also, if you look at ES had this. This was ES's last manipulation leg, right? From this low to this high. So we draw that out, standard deviation projections. What's the low of this candle here? 1875, right? What's the 4 standard deviation? Here's the low of this candle. 1875. Here's 19, right? Misses it just by, or goes past it just by 1 tick, and then goes higher. And once you hit the negative 4 standard deviation, what do we anticipate? We anticipate the 1.5, and the 50% of the range to be your drawn liquidity. What do we have? We have this right here. So now looking at the exact same thing on NQ, we can expect a retracement reversal in this area. And even if you're not using standard deviations, understand that midnight is your discount area. This is now prices being bought and accumulated under here. And so this is how you know you're on sides, right? The first fair value gap created acts as resistance or acts as support. Price goes higher. Now you have a bullish order block created. You can long this if you would like, but you can see price kind of just moves away without displacing, right? No fair value gaps. And now this is a very, very key point. See, this is the quadrant, the lower quadrant of the daily fair value gap. We have our silver bullet zone. These are all different confluences that are able to make this trade really make sense. So now we have, if you go on a lower time frame, this would be a swing high, correct? This would also be a swing high, and then this candle would right here would also be a swing high in a lower time frame. This is a 3 drives pattern. 1, 2, 3. Open, high, low, close candle. Close below the last green up close candle. If you really know what you're looking for, which in this case is exactly what I was looking for, you can go short right here, and your stop loss can be at the high of this candle. So on a day that's this volatile, you can go short as soon as it gets to close, and you can have a 25 point stop for your first take profit of 135 points, right? I did not enter just as soon as this, but because I haven't seen this play out a ton of times, more experience would allow a better entry. But seeing all this play out, seeing exactly what ES was doing, same thing, 3 drives above equilibrium of the last range that it created, the lower quadrant of this daily SIBI that we were inside of, and then this is all I needed to see that I was on sides. So displacement lower, all I did was wait for a retracement back inside of this wick. Wicks are gaps. I got filled right at 35 and a quarter on MNQ. So I was already down $400 at this point, but I entered 5 micro contracts at 35 and a quarter. Stop loss was at the high of this order block. This should be our rejection block. A quality order block you should not reach the opening price of, right? So this was what I was anticipating to be my risk, 35.5 points, and I did not take any of my contracts off until this low here. Understanding that we had London low as another draw on liquidity, and these were just drawn out for my sake, but I got filled there. Really nice candle. You can see this lower wick acting as resistance. That's exactly what I wanted to see. In my head, I told myself I wanted to see this fair value gap stay open. This I wanted to see as a breakaway gap, especially since this change in the state of delivery. You can see here, this candle open highs into this up close candle that we are looking at, right? So now we have displacement. This should be a balanced price range. Really, this could have been my stop loss. So it could have saved like 5 extra points, but it wasn't necessarily worth it. So I was in here. Once we broke below the midnight opening price, this is when I moved my stop to break even. I did not want to see price come back all the way up here. I wanted to see price start to get heavy, especially since we were inside of that macro price. So here's the end of the macro, 1010. I wanted to see price deliver into my pool of liquidity, which it did right here at 10:01. Also, 10 o'clock, new start of a 4-hour candle. That's exactly what you want to be seeing. So 4 of my 5 contracts were off here, and I was going to take my last one off at London low, but I was anticipating ES to start catching up, and London low is all the way down here for ES as well. So I wanted price to catch up, but we did end up having SMT, and ES is the stronger asset on the higher time frames. So once again, just like in my past videos, I have told myself that I need to get better at trailing stops, but that's not my biggest priority. So I was going to take my last profit off here. I did not. I was going to target previous day low, but I eventually trailed my stop to this high. I really wanted to see this order block support price lower, just because this is the last low with the PD array that gets created. The last low that gets broken with the PD array, you really want to see any low get broken, the PD array hold, because then that indicates a true breakout, and you can see kind of what happens, right? This disrespects, and then it flew all the way up here. If I continue to play price, we ended up going lower, but we never actually did end up taking out previous day low. So maybe I was expecting too much. That's something for me to continue to study and journal for my own sake. But I just want to go over the importance of framing the narrative, right? Understanding that all of this is low resistance liquidity, since we are in such a deep premium of the marketplace. We have seasonality kicking in. We're inside of a daily fair value gap. We're inside of an hourly premium fair value gap. We're in the premium of the range. We're disrespecting the 50% of the daily bearish fair value gap. We're closing below with all this displacement. We're leaving breakers behind. If you look at the 15-minute, this is that breaker that I was looking at. As you can see, this is where we actually ended up going short inside of, which I was also anticipating. But really the key of the confluence is that standard deviation lining up with the lower quadrant of the daily bearish fair value gap, and then this change in the state of delivery with the 3 drives pattern. That's smart money tipping its hand to me, and I'm very happy that I was able to execute on this trade. Once again, midnight price acting as a discount level, not chasing price, even though we want to be a part of the move, but understanding that there still is liquidity below. You just got to stay patient. But I'm very happy with how I traded today. I hope this video helped you guys in some way or another. But that is all for me, and I'll see you guys in the next one.